Hello and welcome to Tracy's Tuesday Talks. This is Tracy Latona with Golden Horse Financial Coaching. Thank you for joining me a day late. Tracy's Tuesday Talks on Wednesday. I took a mental health day, half mental health day yesterday because I needed it. So I was able to get some rest yesterday and I feel better for it, re-energized and recharged. So today's topic of Tracy's Tuesday Talks is money and your house. Things in the housing market are just continuing to go crazy ever since the coronavirus shut everything down. Housing prices have just gone through the roof. Interest rates have plummeted. People are in a buying frenzy. They are paying way above the not the assessed value, but the appraised value, what the house is considered to be worth. And now interest rates with mortgages are actually on the rise. So I wanted to take some time today to talk about mortgage rates, how that affects property taxes, the equity in your home, as well as home equity loans and refinancing your house and refinancing it to what the house is considered worth in this explosive market, and how that can be dangerous and actually cause a lot of problems in the future. So let's dive right in and let's talk about this, guys. So as of today, April 13th of 2022, the interest rates for a mortgage and refinancing are between 5 and 6% the national average. I heard that today on a mastermind call. Another coach is a realtor and she said some interesting facts that were like, whoa, that's crazy. So I just felt really inspired to share some stuff with you today. When we bought our house in March of 2020, like a week before the pandemic shut everything down, mortgage rates were like in the 2.8%. So 2 years later, they've doubled. They've almost doubled. And what does that mean? That means that people are a little bit more hesitant to jump into the housing market. They feel like potentially they might have missed the boat, but there's still a really hot housing market going on out there. And what that means is higher prices. People are paying more for these houses, is that it's also increasing property taxes as well. One of the interesting things that I learned, I'm sure you guys are familiar with Chip and Joanna Gaines of the show Fixer Upper. Property taxes in Waco, Texas shot through the roof because they were like flipping these houses and selling them for way more than what they bought them for. And the residents, this isn't a bash on Fixer Upper, this is just what an article I read, the residents' property taxes increased. And we're starting to see that trend on a national level. So what does that mean to have the price of your home increase? Well, it means a couple of things. It means A, the equity or what your home is worth versus how much you owe on it. That gap is your equity. Means that has increased. Your house is worth more than you owe. That seems like it's a good thing. But that also means that property taxes have increased as well. And that is actually going to affect your mortgage payment. So between 2019 and 2021, so here in 2022, we're going to start seeing the effects of the 2021 property tax increases. Property taxes, the growth doubled to 5.4% of the assessed value of your home. So whatever your county says, hey, this house can be taxed to this much, the average is 5.4% of that. Here in Southern Indiana, I mean, our property taxes, thank God, are like very, very minimal, but ours doubled, like almost to the dollar amount doubles in property taxes from last year in 1 year. So what does that mean? That means that when your escrow, like the account that you have when you have a mortgage that you pay into that automatically pays your property taxes and your insurance, that's going to need more money. So your mortgage payments is going to increase. Ours increase, not by much, but there's going to be some people who notice a big difference in what their mortgage payment is and what they're paying for their house. Also, one other thing, transitioning into the next part of the topic, is equity in people's homes have increased by about 30% in 1 year. So that is great if you're selling. That means you get 30% more in 1 year than what you would have gotten before that time. However, once again, that affects taxes. How much you pay in taxes affects your mortgage. How much you pay on your mortgage affects your finances. It affects your home, your budget. It affects how you're able to feed your family and pay your bills because your mortgage has gone up. So, what's going on with the mortgage rates increasing? So, just doing a quick search, it's not expected that the housing market is going to crash in 2022. Instead, what's going to happen, what's expected to happen, just based on some research on Google, is they're expecting what's called a pullback. What that means is that there's going to be fewer people, for fewer first-time home buyers, fewer people starting to look for homes because interest rates are higher, but these housing prices are still crazy high. So that means hopefully that the housing market is going to stabilize a little bit. So I don't know about you guys, but it seems like every day I get at least one, sometimes up to 3 or 4 offers in the mail for refinancing or taking out a home equity loan or some other loan application that has to do with our house. Guys, I am hearing about people who are taking advantage of the increased equity in their home to refinance their house to that higher amount. So let's just say they bought their house for 200. They paid it down to 150. Well, now their house is worth 260. So they're refinancing their home to the 260 and pocketing that extra $110,000. Please don't do that. Please don't do that. Think that through. People are thinking, oh man, I get to get the kitchen of my dreams, or I get to make repairs to my house, or I'm going to pay off debt, or I'm going to do all this extra stuff because they took the equity out of their house. Well, that's also going to clearly affect your mortgage payment too, because now instead of having a $1,500 mortgage payment, just throwing numbers out there, you now have an $1,800 or $2,000 a month mortgage payment. But we got $110,000 that was in the equity of our house. If your house does go down in value, which it may not, I don't know, I'm not an economist expert, you're upside down on your house. And not only that, but you've also increased the value of your house if you pour that money back into your house and get a new kitchen and put in a patio and redo the flower beds and all this other stuff that increases the value. That raises your property taxes, which makes your payment even more. So this group of coaches that I met with this morning, we're anticipating like starting this year, next year, there's going to be people who, because of these increases in equity and these increases in property taxes and people taking out home equity loans and refinancing and pocketing the entire value of their house, people aren't going to be able to afford their house payments. They're going to be stuck. and they can't sell their house because they can't get anything for it because they took all the equity out of it. They're stuck. Please don't do that. Please don't put yourself into a position to where you are borrowing against your house, where you're borrowing against your biggest investment. I get passionate about this stuff. And if you find yourself wanting to refinance, I mean, interest rates have gone up, but if you're still thinking about it because you've still got a higher interest rate, refinancing can be a good thing if you refinance for a lower interest rate by about 1% or so, is about the break even point over 5 years. And you don't extend how long you pay on your loan. Do the math, guys. Please be smart. And if you want some help, if you want some guidance with this, or if you've noticed that, yeah, my mortgage is higher, along with gas prices and groceries and goodness knows everything else, and you want some help, you want some guidance, you want somebody to walk alongside of this with you, to encourage you, not to judge, but to walk alongside of you to create a plan to get through this, I would be honored. Let's have a conversation. I guide people to confidence and clarity with their finances to achieve financial freedom. And that looks like creating a roadmap, tools, and accountability to get from where you are here to where you want to be there, envisioning your financial future. Thank you so much for joining me on Tracy's Tuesday Talks. Hope this has been helpful. Thank you for allowing me to get fired up, passionate. Thank you. And join me next Tuesday with special guest Troy Jarelis. He is an investment professional, and we're going to talk about how to build wealth, lasting, generationally changing wealth. Thanks, guys. Have a blessed day.